For much of 2023, a lack of housing inventory has dominated the headlines in the Greater Toronto Area real estate market. It hasn't taken long in September, though, for us to see some of that inventory come to market. How's it going, everybody? It's me, Rob Marsiglio. I am a sales representative with Keller Williams Referred Urban out here in Durham Region, serving the great people of this area and doing my best to bring you weekly content covering all things Greater Toronto Area real estate. And this week, something big is happening. We're getting a big flood of inventory, as you could probably tell from the thumbnail of the video. These are two charts that I shared on Twitter this past week, and they show that on the Toronto freehold market and the Toronto condo market, new listings for the week hit a high that we haven't seen in the past year. Now, we got some pushback on this saying, it was a quiet spring. A lot of people waited to list homes. They wanted to see what was happening with rates. And now that there seems to be some stability with rates, people are choosing to come to market. I agree, new listings isn't always the best indicator to say what is going on in the market. They could have just been a bunch of listings that were canceled last week, brought back to market this week, and you expect to see an uptick after the Labor Day long weekend. But I wanted to do some further digging just to give you some historical context as to, how does this year's post and pre-Labor Day listings activity line up to previous years. So that's what I did by putting together this little table. This column is pre-Labor Day new listings to hit. This is the Sunday to Saturday leading into the Labor Day long weekend. And this is the post-Labor Day week. This is the Sunday to Saturday that includes Labor Day Monday. So really, you're only getting about 4 business days of listings in the week post-Labor Day. But you can see, quiet summer week last week of August, kind of early September, leads to a slightly busier first week of the fall market. You can see on average that weekly basis, listings will go up about 111%. So we're seeing more than double the number of new listings in the week post-Labor Day, despite it being a short week compared to the week pre-Labor Day. This year in 2023, we have it highlighted. We saw 149% jump in new listings pre-Labor Day to post-Labor Day. So in terms of an actual change, it is kind of the 4th highest going back to 2008 in terms of that jump. When you look at it as a percentage change, I believe it was the 3rd highest jump that we've seen. Taking a look there, it kind of does look seasonal, actual jump on average is about 358 more listings the week post Labor Day versus pre, and we had 379 more this year. So that wasn't too surprising. What was surprising to me, though, was that, again, for both the Toronto freehold and condo markets, this was the busiest listing week of the entire year. That's something that we just do not see. Exactly how rare is that? Well, it's only the 2nd time going back to 2008 that we've seen more new listings in that short week post Labor Day than we have I did the first full week of May as our reference point. May is usually the month when we do see the most listings come to market in the Greater Toronto Area. For this example, we're using the Toronto freehold market because this is one of the 2 markets that exhibited this kind of strange pattern. But as you can see, 2020, let's throw that right out the window. We all know what happened in kind of March, April 2020. This year, 578 listings, new listings came to market that first week of May. And post Labor Day, we're at 632. That's a 9.34% increase. A lot of this is double-digit drops. Like, we don't usually sniff anywhere near the number of listings in May that post Labor Day week. Record-setting new listings in a week could mean very little, but when we look at this next graph, I think we can see that these new listings are definitely having an impact on active inventory. Here's our active inventory breakdown that we do weekly going back all the way. This is last May 9th. In the kind of less than 2 weeks since the start of September, we've seen a kind of massive spike in active inventory in the Toronto condo market. These numbers here are the total number of active listings as per TREB. New highs for the past year plus in active listings on the condo side. We're seeing the same thing in York Region and Peel Region right here. Toronto freehold market isn't quite at the peaks of the last year. We slightly touched higher last June, but they did have the biggest jump so far in September. They've jumped almost 30% in the number of active listings on the Toronto freehold market. Then Halton and Durham Region are also exhibiting some pretty strong active listing growth. What it will really all come down to now, though, in terms of, sure, active listings can go up, but just because active listings are climbing doesn't mean we will have an impact, or we will see an impact on pricing as a result of that. Real estate is not like the stock market, as we've discussed. In the future, we could see, active listings grow, but if those sellers aren't serious, if they aren't, maybe desperate's the wrong word, but needing to sell their homes, active inventory could just build up until, the proverbial cows come home, and we wouldn't see an impact. What we need to look at is, what is happening with the rate of sales as well in the next couple of weeks. And early in the month, we are starting to see the 30-day rate of sales rebound just a little bit. If we try and pull this back to compare to where we were at last year at around the same time, pretty similar in the condo market. Peel and York region are definitely lagging a little bit. The Toronto freehold market, same idea. We're kind of lagging just a little bit where we were last year at this time. Durham region, again, pretty similar to the rate of sales that we saw last September. And Halton, I'm sorry, I didn't start tracking on a weekly basis really until June of this year. Active listings are on the rise then. The 30-day rate of sales is starting to bounce back a little bit. Let's give it a couple more weeks to really see how we settle into things. We've talked about this before, but sales do lag new listings by a couple weeks. That has a lot to do with the strategy in the Greater Toronto area. People still trying to do the offer night where a property will be on the market for a week or two before they even look at offers. So we will see the flood of new listings and active inventory prior to any potential sales activity. At the end of the day, monitoring active listings, monitoring the rate of sales gives us some indication as to what is happening with the market, but I know you all want to just see what is happening with prices as well. So let's dive into those very quickly to wrap things up here. Forward to a screen this week, we have Toronto freehold and condo properties at the top, Durham region and York region. Peel and Halton, don't worry, I'm going to get to you on the next slide. But what I've done is I've highlighted the 4-week moving average for the median sale price for the current week and the peak as well. And you can kind of tell what's going on here. So we saw a slight jump in the median sale price week to week in Toronto freehold market. York region had a big jump, but on the bottom of each chart also you can see our weekly sales activity too. These numbers are based on some low volume, and like I said, this most recent week always does have some room to change as more sales are reported. This kind of orange bar will grow and that median sale price will adjust up or down accordingly. Bottom line, the dramatic jump that you're seeing in York region and in Peel region on this screen here could be as a result of low volume. Let's not read too much into 1 week of a jump as to what is happening with prices in these markets. In talking with colleagues, September was the month we were looking most forward to. It's kind of hard to glean much out of these summer months. Yes, I like to keep you up to date as what is happening with the market because people are always transacting at any given point in time. But when it comes to seasonality, price dips, sales activity slowing down was something we expected through the summertime. Now we expect to see maybe a slight bump in prices seasonally in the fall market. We'd expect to see sales increase, maybe not quite to levels we were seeing in the spring, but definitely to levels higher than we saw at any point during the summer. It's still just a little too early to tell. Are the buyers coming back? Are the sellers being realistic? Are buyers able to actually afford and purchase these properties? So over the next couple of weeks, I think it's going to tell us a lot more about kind of the future, the short-term future of our market. We are keeping track of all those things that are affecting affordability. We have a bunch of CPI prints, GDP data coming in this month and next prior to our next rate announcement. So let's keep an eye on what is happening with all that stuff, as well as the active inventory story and the sales between now and then. I hope you got some good value out of this week's video. I appreciate you sticking with me right through to the end. And until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.